Diversification is the only free lunch, according to famous economist Harry Markowitz. Now, what if I tell you there is one single fund that can take care of all your diversification needs, whether it is equities, debt, real estate, gold, commodities, etc.? Well, multi-asset funds do that by offering you investments across different asset classes. The top 5 multi-asset funds have delivered a 3-year rolling return of 12% on an average over a 7-year time window. This means that if we look at the data points on a daily basis across a 7-year time window, on an average, these funds delivered 3-year returns of 12%. A well-managed multi-asset fund can bring down the overall volatility in your portfolio. On an average, these funds have standard deviation of just 5.7%. The other benefit of a multi-asset fund is tax efficiency. Now, if you were to rebalance your portfolio from debt to equity to take advantage of the decline in stock markets, you will have to pay taxes on the gains from the debt component. But with multi-asset funds, you don't have to worry about that. Well, with multi-asset funds, such asset switches happen in the fund itself by the fund manager. So there is no tax implication for you as and when these switches happen. Of course, at the end of the holding period, when you finally redeem your investments, you will have to pay taxes on your final gains. And as you don't have to rebalance the portfolio on your own, you don't have to worry about getting the timing right of such asset switches. You also need to keep in mind some caveats when it comes to investing in multi-asset funds. First, not all multi-asset funds are the same. Some maintain higher exposure to equity, while some maintain higher exposure to debt. And not all multi-asset funds will invest in all the asset classes. For example, some multi-asset funds would invest in gold, silver, along with other asset classes, while some multi-asset funds would also go beyond gold and silver and invest in other commodities through their future contracts. Secondly, different multi-asset funds are taxed differently. If your multi-asset fund has 35 to 65% exposure to equity, then the multi-asset fund will get indexation benefit as well as the benefit of long-term capital gains tax rate of 20%. If your multi-asset fund has 65% or more exposure to equity, the multi-asset fund will get benefit of equities taxation, which means the gains from such funds will be taxed at LTCG tax rate of 10%. On the other hand, if your multi-asset fund has only up to 35% exposure to equities, your multi-asset fund will be treated as debt fund for taxation purposes, which means that gains from such funds will be taxed at your income slab rate, which will be 30% if you fall in the highest tax bracket. As you can see, different multi-asset funds have different risk return profile due to different asset allocations. So choose a multi-asset fund that meets your own risk return expectations.